For the last 2 days, the market really has stabilized, particularly with the Chinese market. It surprised me a little bit, but not too much, partially because the Trump administration has been sending signal that a deal is closed. And also the Chinese negotiator, Vice Premier Liu He, also said that a deal is closed and that some disagreement close to the finish line is normal. And so that the market really has calmed down somewhat. We haven't really recovered fully to what happened last Friday, but we have recovered partially. So I think the market at this point is really expecting maybe not a full deal, but a partial deal in the next 6 weeks or so. So I think the market has calmed down somewhat.
What if we don't get a deal, John? What happens?
Yeah, I think that would be very bad for the market. But obviously, both sides would be hurt if we don't get a deal. I think after all this work that has been done for months, a deal is really close. So I think if we don't get a deal, let's say for the next 3 or 4 months or even longer, or the trade rhetoric escalates, I think you'll see the market come down. And obviously, the Chinese economy would be hurt much more than the US, but both sides would be hurt.
Yeah, and you look at the U.S. economy from your side of the pond. We get so much commentary from U.S.-based corporations about the damage that tariffs may do to our economy. How do you see the tariffs impacting the United States economy from where you sit, John?
Yeah, well, I happen to work in a global company with my colleagues in investment teams in the U.S. So, I do get a lot of feedback from the U.S. colleagues. But on this side of the pond, the views are actually quite similar. After all, the U.S. is a big economy. It has a lot of capacity to absorb a lot of shocks. Some of the data that we have looked at from SCI is that when you look at the percentage of tariff relative to the total import in the U.S., it's really small. It's something around 2% or so, compared to, let's say, in the 1930s, when the percent of tariff relative to total import is around 20%. So even when we get higher tariff from China, I think the U.S. economy can quite easily absorb that. Of course, there'll be pain in some segments of the market, consumer, toys, this and that. But overall, I think the impact might not be that bad. But on the flip side, I think if the trade war is prolonged and is escalated, the damage to the Chinese economy could be quite high. So I think all in all, I think there is actually incentive for both sides to strike a deal, which is really what the market expects and hopes.